Are you an entrepreneur or involved with a company that needs consultation as to how to operate and maintain a 401k plan? Well, we've done many of those. What follows are specific steps that are outlining the maintenance of a 401k plan. Hi there, my name is Kenner French and I'm with Vast Solutions Group. We are your tax and financial engineering firm for entrepreneurs. What we've been doing for 50 years is pleasing clients with the administration of qualified plans of all types. So we are going to go over the specifics of how to maintain a compliant 401k plan. Now, once you've established a 401k plan, you assume certain responsibilities in operating the plan. If you've hired someone who's helping to put together that plan, that arrangement may also have included some help in operating the plan. If not, another important decision will be whether to manage the plan yourself or to hire a professional financial institution such as a bank, mutual fund provider, insurance provider, or a third-party administrative firm, or any of the above. Now, elements of a plan that need to be handled include the following. It's going to be a rather long list. Participation, who's in the plan. Contributions, vesting, non-discrimination testing, investing 401k monies, fiduciary responsibilities, disclosing plan information to participants, and finally reporting to government agencies. Obviously, also have to remember distribution of assets and compliance. Typically, a plan includes a mix of rank and file employees, owners, and managers. However, some employees may be excluded from a 401k plan if they are the following. They have not attained age 22, they have not completed a year of service, or are covered by a collective bargaining agreement that does not have to provide participation in the plan. If retirement benefits were the subject of good faith bargaining, as an example, employees cannot be excluded from the plan merely because they're older. That's important, very, very important. Another design option you will have in establishing and operating a 401k plan is deciding who's going to be making the contributions, the people or not, meaning the employees or not. Now, if you decide to contribute to your 401k plan, you have further options. You can contribute a percentage of each employee's compensation to employee's account called a non-elective contribution, or you can match the amount your employees decide to contribute within the limits of current law, or you can do both. For example, you may decide to add a percentage, let's just say it's 50% to an employee's contribution, which results in a 50% or 50-cent increase for every dollar the employee sets aside. Using a matching contribution formula will provide additional employer contributions only to employees who make deferrals to the 401k plan. If you choose to make non-elective contributions, the employer makes a contribution for each eligible participant, whether or not the participant decides to make a salary deferral to his or her 401k account. Now, under a traditional 401k plan, you have the flexibility of changing the amount of the non-elective contributions every year according to business conditions, depending. Under a safe harbor plan, you can match each eligible employee's contribution dollar for dollar up to 3% of the employee's compensation and 50 cents on the dollar for the employee's contribution that exceeds 3%, but not 5% of the employee's compensation. Now, alternatively, you can make a non-elective contribution equal to 3% of compensation to eligible employee's account. Each year, you must make either the matching contribution, the non-elective contribution, either or. Under the automatic enrollment 401k plan with qualified automatic contribution arrangement, the plan is exempt from the annual IRS testing requirement that a traditional 401k must perform. The initial automatic employee contribution must at least be 3% of compensation. Contributions may have to automatically increase so that by the 5th year, the automatic employee contribution is at least 6% of compensation. The automatic employee contributions cannot exceed 10% of compensation in any single year. The employee is permitted to change the amount of his or her contributions or choose not to contribute, but must do so by making an affirmative election. Now, the employer must make at least either a matching contribution or 100% for salary deferrals up to 1% of compensation, and a 50% match for all salary deferrals above 1%, but no more than 6% of compensation or a non-elective contribution of 3% of compensation to all participants. There's also something called the Simple 401k plan. The employer contributions to a Simple 401k plan are limited to either a dollar-for-dollar matching contribution up to 3% of pay, or a non-elective contribution of 2% of pay for each eligible employee. No other employer contribution can be made to a Simple 401k, and employees cannot participate in any other retirement plan of the employer. A maximum amount that employees can contribute to their Simple 401k is $13,500 in 2020 and $13,000 last year. You have to look at the continual updates for specifics. An additional catch-up contribution is allowed for employees age 50 and above. The additional contribution amount is $3,000 in 2020. Now, let's get to contribution limits. Total employee contributions of all employer plans are subject to overall annual limitations. The lesser of 100% of employees' compensation, or $57,000 for this year, meaning 2020. The amount employees can contribute under a traditional safe harbor automatic enrollment 401k plan for 2020 is $19,500. Traditional and safe harbor and automatic enrollment 401k plans can allow additional catch-up contributions in the amount of $6,500 in 2020. Now, it's important to note, now, vesting is important. Salary deferrals are immediately 100% vested. That is, the money that an employee has put aside through salary deferrals cannot be forfeited. When an employee leaves employment, he or she is entitled to those deferrals plus any investment gains or minus losses on their deferrals. In Simple 401ks and also in Safe Harbor 401ks, all required contributions via employer are 100% vested. In addition, 401k plans, you can design your own employer contributions to become vested over time according to a certain vesting schedule. Realizing 401k plan benefits requires that plans provide substantive benefits for rank and file employees, not only for employee business owners and managers. These requirements are referred to as non-discrimination rules and cover the level of plan benefits for rank and file employees as compared to owners and managers. Now, traditional 401k plans are subject to annual testing to ensure that the amount of contributions made on behalf of rank and file employees, they are proportional to contributions made on behalf of owners and managers. Safe Harbor 401k plans and Simple 401k plans are not subject to annual non-discrimination testing. Now, after you decide on the type of 401k plan, you can consider a variety of investment options. One decision you will need to make in designing a plan is whether to permit employees to direct the investment of their accounts or to manage the monies on their behalf. If you choose the former, you also need to decide what options to make available to participants. Depending on the plan you design, you choose, you may want to have someone else do the allocations and investments, or it could be issues down the road. Continually monitoring the investment options ensures that your selections remain in the best interest of your plan and its participants. Now, plan disclosure documents keep participants informed about the basics of the plan operation, alert them to changes in the plan's structure and operations, and also to provide them a chance to make decisions and timely action with respect to their accounts. A summary plan description, or SPD, the basic description document, is a plain language explanation of the plan and must be comprehensive enough to apprise or inform participants of their rights and responsibilities under the plan. It also informs participants about the plan features and what to expect of the plan. Among other things, the SPD must include information about the following: when and how employees become eligible to participate in the 401k plan, the contributions to the plan, how long it takes to become vested, when employees are eligible to receive their benefits, and how to file a claim for those benefits, and basic rights and responsibilities participants have under certain federal retirement laws. Also, the employee, or what's called the ERISA as well. The SPD should include an explanation about the administrative expense that will be paid by the plan. Now, this document must be given to participants when they join the plan and to beneficiaries when they first receive the benefits. SPDs must also be redistributed periodically during the life of the plan. A summary of material modifications, SMM, apprises participants of changes made to the plan or to the information required in the SPD. The SMM, or an updated SPD, must be automatically furnished to participants within a specified number of days after the change. An individual benefit, or IBS statement, shows the total plan benefits earned by a participant, vested benefits, the value of each investment in the account, information describing the ability to direct investments, and for quote, plans with participant direction, an explanation of the importance of a diversified portfolio. Plans that provide for participant-directed accounts must furnish individual account statements on at least a quarterly basis. Plans that do not provide for participant direction must furnish statements at least annually. A summary annual report, SAR, is a narrative of the plan's annual return/report. The Form 5500, which is filed with the federal government, it reports to the specifics of the plan. It must be furnished annually to participants. A blackout period notice gives employees advance notice when a blackout period occurs, typically when a plan changes record keepers or investment options, or when plans add participants due to corporate mergers or acquisitions or what have you. During a blackout period, participants' rights to direct investments, take loans, or obtain distributions are suspended. Reporting to government agencies is important. In addition to disclosure documents that provide information to participants, plans also report certain information to government entities. Plans are required to file the annual report with the federal government on an ongoing basis. Depending on the number and type of participants who are covered, most 401k plans must file one of the following forms. A Form 5500 is an annual report of employee benefit plans, or Form 5500EZ, an annual report of one participant, that being an owner, as an example, and his or her spouse. For 401k plans, the Form 5500 is designed to disclose information about the plan and the operations to the IRS, the Department of Labor, plan participants, and also to the public. Most one participant plans or solo props, let's say, with assets of $250,000 or less are exempt from the annual filing report, although there are some specifics that need to be followed. A final return report must be filed when a plan is terminated, regardless of the value of the plan assets. Form 1099-R is what it's called. 1099-R, it basically tells the government what's going on with the plan as far as specifics and the distribution of assets. Now, if there are any questions about any of the specifics we've talked about, please check us on the web at www.vastsolutionsgroup.com or give us a call at 888-808-8278. We are here to help not only in establishing a 401k, but also in the ongoing maintenance and, even more importantly, the compliance of the 401k. Any of these plans, they can be specific, maybe a little hard to understand at times, but the most important thing to think about is they are usually perfect for people who are looking to lower their tax liability or specifically to help them towards retirement. Once again, my name is Kenneth French, and it's indeed been a pleasure to touch base with you about the specifics and of the ongoing process of maintenance of a 401k plan. Thank you.